Hey Bowtie Nation, Joseph Hogue here. Thank you for joining us for another Monday market update, 9 a.m. Eastern, every Monday morning. Get you ready for the week with stocks to watch, some economic news that could guide the week. And Nation, I know there is a lot of FOMO out there. Investors are hoping with that slower inflation, the banking crisis, that the Fed is going to stop raising interest rates and the market can continue to head higher. It will happen eventually, but we are still in for a bad recession. Okay, there are consequences to the fastest pace of interest rate hikes in 40 years. We're just starting to see that with the banking crisis, and there will be more. There will be a slowdown, and there will be a recession. The good news is that there are still good stocks out there. Okay, stocks increasing their dividends for that commitment to shareholder cash return. I want to highlight 4 of those today. In fact, 2 of them that are going to go ex-dividend this week. So you need to buy them this week if you're going to get that most recent dividend. Stick around. Then we'll do our market update with some of the stocks I'm watching and some big economic news this week. First, I do want to highlight another safety asset I've been buying lately. The price of gold is up 8% this year as that safety asset against the weakening economy and just that bank crisis. I know a lot of people pulling money out of their banks to hold in gold for kind of a savings account there. While I don't expect gold to outperform over the long term, it's already up to right around $2,000 an ounce. I am using Vaulted to buy gold as a safety play and store of value against more market weakness this year. I highlighted Vaulted in a video a few years ago when I first started using the app. I'll link to that in the description below for a step-by-step to buying physical gold. I did redeem my original purchase to take advantage of the pandemic surge in stocks, but I'm now buying back in for that safety protection. I'll also post a link directly to Vaulted in the description below. The app makes it easy to buy 99.99% pure gold with the lowest transaction fees I've found online. You can store your gold bars with the company at the Royal Canadian Mint or just take delivery yourself. They actually ship it to you. I do want to get to those dividend stocks though, because as estimates for corporate earnings this year get cut and threaten that stock market rally, there is no better sign of confidence than a company increasing its dividend. Okay, a company that knows it's going to have the cash flow there that it can pay out more to investors. There is no matter what happens to stock prices this year, folks, you know that dividend is always going to be a positive cash return. So I wanted to highlight some of my favorite dividend stocks that are increasing their payments and with those payments coming up just over the next month. I'm going to highlight 3 dividend stocks here with an honorable mention stock kind of with their payout with an average 13% increase in their dividend stocks, with one raising its dividend by 20% just over the last dividend. Understand though, you are going to have to watch the dates on these if you're going to get that upcoming dividend. Okay, each of these stocks goes ex-dividend within the next 3 weeks, and 2 of them are this week. Remember, to get that next dividend, you have to own the shares before the ex-dividend date. Okay, the ex-dividend date, that's the first day the stock trades ex-dividend without the dividend. So you have to own it on the day before that or before. Okay, so for example, if a stock goes ex-dividend date on March 28th, then you have to own the shares in your account March 27th, the close of business March 27th, to be able to get the dividend when it's paid out. To find these stocks, I looked for all the stocks with an ex-dividend date in the next month and that had increased their payments, and then I ranked them for how much they increased their payout. I then filtered only for those stocks paying above the market average yield, which is about 1.7% right now, so only stocks paying about a 2% yield or higher. First up here is CNH Industrial, ticker CNHI. It's a maker of farm and construction and machinery. I've been following this theme closely, with Caterpillar, with John Deere, really on that strong demand for agricultural machinery, but then the coming demand for construction as that infrastructure bill, that infrastructure money gets distributed to the states. Now, CNH increased its dividend by 20% over the most recent one, the largest increase in this group to 39 cents a share for a 2.6% yield. It has grown the dividend by an annual pace of 16% over the past 5 years. So this dividend is just going to keep on growing. But this one only pays once a year. So if you want the 2023 dividend, the dividend coming up for this year, you have to buy the shares before that ex-dividend date of 4/23, April 23rd, or you're going to have to wait a whole nother year. So remember, you're going to have to own these shares before 4/23, so 4/22 or before that, at the close of business 4/22 to get that dividend day. I've also been sifting through the rubble on bank stocks for signs of good deals, and I'm going to talk about another one that is up 16% just Friday, probably going to be up Monday as well. But here I'm watching Bank United, ticker BKU, just gave us a really good sign of its own cash flow with an 8% increase in its dividend to 27 cents a share. Now, that gives it a very high 4.8% yield, and the bank has grown that dividend by 5% annually over the past 5 years. So, very strong record of dividend growth there. The sell-off took the shares 35% lower in March. BKU now trades for just 0.66 times book value, about half the valuation from what we saw last year. This is a traditional regional bank with branches in New York, Florida, and Texas, which really gives it that strong population growth in Florida and Texas, and a focus on commercial and retail business, not the startup business and the crypto business that sank a lot of those other two banks. It should help support deposit growth. Now, to get this quarter's dividend, you need to own the shares before that 4/11 ex-dividend date. So April 11th, it's going ex-dividend. You have to own it. Close of business on 4/10. All you out there in the nation know I love me some real estate. And next is Residential Real Estate Trust, or UDR Inc., ticker UDR. Now, the multifamily apartment space is being pushed and pulled over the last year. Okay, on the one hand, higher interest rates have just destroyed real estate trusts because that higher leverage they use, and shares here are down 32% over the past 15 months. On the other hand, those high home price increases and the higher rates really keeping people renting for a lot longer, which should help protect this company and the cash flows. And management just increased the dividend by 10% to 42 cents a share for a solid 4.1% yield. UDR is targeting funds from operations around $2.50 this year. That's going to mean it's got about a 1.5 times FFO coverage. So the funds from operation divided by the dividend it pays out, that's the FFO coverage ratio. It's about 1.5 right now. Really means this dividend is safe. It's covering its dividend by 1.5 times. Now, the company grew the dividend 5.6% over the last 5 years. Trades for 16 times FFO, which is fairly cheap for this type of REIT, for an apartment REIT. Shares here go ex-dividend this Thursday, though, so you're going to need to buy them before 4/6. You're going to have to own them 4/5 if you're going to get that current payment. Honorable mention here for the group. I like the long-term theme for Quest Diagnostics, ticker DGX. It's the leading independent provider for healthcare diagnostics and testing in the United States, and basically with its competitor LabCorp, the two have a duopoly market, so they can get really good returns without really having to compete against each other, falling into that price competition. Now, Quest has grown its dividend by 7.3% annually over the past 5 years, and recently upped it 7.6% to that 71 cents a share. Now, this one only gets that honorable mention, though, because it's only paying a yield of about 2%, which is above the market average, but not by much, really. Still, it's a relatively safe and stable dividend stock. This one does go ex-dividend on Thursday also, though, 4/6, so April 6th. So you're going to need to own the shares before that date, April 5th, if you're going to get the quarter's payout. I want to shift now into our market update, some of the stocks I'm watching this week, what the sectors are doing, and important economic news. First up here, First Republic Bancorp, ticker FRBK. This one would be hilarious if it wasn't so tragic, but this stock has fallen 35% in the last month in that tragic case of mistaken identity. Now, I actually used this opportunity to buy 10,000 shares of this stock on Friday. You can see it was up 14% last Friday. After hours on Friday, it was up another 16% as this mistaken identity really gets reversed. Not only has the Philadelphia-based regional bank suffered from the banking crisis, but it's also plunged even more as investors confuse it with San Francisco-based First Republic. Okay, that's ticker FRC. That's really, the big bank, the biggest regional bank right now that is threatened by this banking crisis. But the banks couldn't be more different. Okay, while FRC, so that First Republic Bank, is focused on those startup company deposits there in San Francisco and needed a rescue from the FDIC, FRBK, First Republic Bancorp, is focused on commercial and retail clients and is financially sound. Okay, investors just got the names confused and they're selling off, or they sold off, this First Republic Bancorp. The stock now trades for just 0.42 times book value. It's a 59% discount to its valuation just a year ago. Now, weakness in regional banks is only going to gradually get better, but longer term, there are some great opportunities for return. And again, I'm taking advantage of that mistaken identity here in FRBK to pick up shares. Alibaba Group Holdings, ticker BABA, may give back some of last week's 19% jump over the next week or two. You see it did fall 1% last Friday, but it is still a strong buy on the news that it's going to plan to split into 6 companies. I highlighted the valuation on this in a video last week. I'll link to that in the description below. And I really like the shares up to at least $130 each over the next year. Okay, each of these 6 business segments is going to start operating independently and eventually try to seek to issue shares as an IPO and completely split apart from the rest of Alibaba. The logistics unit here is already working with investment bankers for an IPO, so that's going to keep the momentum going for this stock. ConAgra Brands, ticker CAG, it's going to report its earnings on Wednesday and should be a good safety play for investors worried about the rest of the stock market over the rest of this year. Expectations for full year earnings are for $2.68 a share. It's on a 7% sales growth. Now, food processors like this suffered early in that inflation run-up over the last couple of years, but have now become some of the best performers in consumer staples stocks. The stock trades for just 14 times on a PE basis. It's a discount to the longer-term 18 times average. So the stock is trading for a discount to its long-term average. Management is about halfway through a supply chain savings program that should also help it see kind of some higher profitability margins through 2025. It's going to be a pretty slow economic news week until we get to Friday's jobs report. We do have some ISM data to move the markets outside of some Fed speakers. The ISM manufacturing index is expected to show a further contraction in that, expected to show 47.3 versus 47.7 last month. Now, anything under 50 for these ISM data releases, anything under 50 is contractionary, is showing that the economy is weakening, is slowing down. So it is expected to show 47.3, further contraction in the manufacturing sector of the country. We also see the ISM services index is going to follow on Wednesday with expectations of 54.4 versus 55.1 last month. So that does show or will show that the services sector of the economy is still growing, though it is slowing down that growth from what we've seen over the past few months. Of course, the jobs report on Friday will be the big economic news of the week, with expectations for just 235,000 jobs created in the U.S. over the last month. Now, while the unemployment rate is expected to stay at 3.6%, that would be a significant slowdown from 311,000 jobs the month before and 500,000 jobs plus in the months before that. Now, with that resiliency in jobs and the jobs market, I doubt the jobs growth is going to come in much lower than 235,000. It's probably going to beat that even a little bit, but it's still going to show a slowdown, a slowdown, and reaffirm that idea that a recession is coming. So you need to be ready for it in some of these dividend stocks, in some of it, maybe in gold, in cash, and be ready for that market slowdown. Check out the Vaulted app with the link below, the app I use to buy my gold, or click on the video to the right for the 7 dividend kings that will never let you down. 7 dividend stocks that have increased their payments for more than 50 years. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.